Hi, welcome back. The market is just running away right now. The Nifty is up more than 100 points and the Sensex has zoomed about 360 points. Remember, the best case scenario that most analysts were forecasting was a BJP-JDS combine. But now, looking at the numbers, it seems like BJP could go alone with 114 seats. Blue Star, though, reported a mixed set of earnings. So very quickly, let's get the management. Revenue growth disappointed, but the margins were healthy. Veer Advani, the MD of Blue Star, joins us now to talk about that. Mr. Advani, good morning. The revenues were actually disappointing this time. It fell almost about 8% odd. What went wrong and what is the prognosis now?
Actually, we had a very strong quarter and year-end, so I'm not sure what numbers you're looking at. I'll just summarize. For the full year, revenue grew 12% to 4,643 crores. Operating profit actually grew 24% to 276 crores. We actually had a strong quarter four. In fact, revenue grew faster in quarter four than the first 9 months.
Okay. No, in fact, I think the expectation was a bit more growth in terms of revenue. So you've seen about 7.7% or so. But what is the expectation as far as FY19 is concerned? On the base of this 4,600 crore number for the full year, how much do you think you could grow next year?
Sure. So just one clarification. As you know, last year's numbers have excise duty built into them. So on a like-to-like basis, the growth is higher than what you're seeing in the reported results. But nevertheless, I take your point. Q4, we had a growth of about 16% in revenue. We're expecting FY19 to be a faster growth than FY18. I think like other companies, we did lose a couple of months of business on account of GST transition in FY18, which we made up well, but could not make up the overall revenue loss of about 250 crores. So looking ahead in the new year, we expect to grow between 18 and 20% at the revenue line, and we expect profitability to improve further, and therefore aiming at profit growth about 25 to 30%.
Which means you will be able to pass on higher raw material costs, maintain your margins.
Yeah, so absolutely. So there's a lot going on the cost side, as you know. So we did have one round of commodity price increase last year. We were able to raise prices somewhat in the middle of the year, and that's how we were able to grow profit in FY18 faster than revenue, as you've seen. Subsequently, what has happened is that foreign exchange has, the US dollar has moved quite substantially. So there will be some impact on cost going forward. However, as you know, we are a seasonal business. So our summer stocks have already been built up on old costs. So there'll be no cost impact in the current summer. But post-summer, if the dollar doesn't re-stabilize, then we may have some impact.
All right, we'll leave it at that. Thank you very much for joining us with all those details. Today, the markets are compelling attention and the Nifty now crosses over 10,900.